we're telling about oil prices slip sliding away when they touched around $10.50 a barrel. That was the lowest we had since 1986. Again, Ronald Reagan was president then. But this has a spillover effect, not only on Exxon and Chevron, two key Dow components, but all the energy-related players from Schlumberger, Marathon Oil, Noble Energy, ConocoPhillips. We've also have Halliburton, Phillips 66, Valero, Apache, Devon Energy, on and on it goes. Now, chemical players are the rest that rely on this, and those costs go down. They might be beneficiaries, but very few beneficiaries to be seen or had today, although I stress we are well off our lows. Now, this seems to be even in the face of OPEC and OPEC ancillary players, the so-called plus players, agreeing to cut production by upwards of 20 million barrels a day to Phil Flynn. Now, Phil, I think the problem was even cutting 20 million barrels a day, if it were to ever pass, doesn't come close to the lost demand we're looking at, right?
Absolutely correct. And the thing you have to realize, too, the contract that we're looking at today, the May contract that expires tomorrow, it's not coming fast enough. The OPEC production cuts haven't even started, Neil. They don't start until May 1st. So if you're getting oil today, there's no place to put it, and that's why we're seeing this incredible sell-off. I mean, we're going to go back and look in the history books at this day, Neil. Maybe 25 or 50 years from now, it's an example of what can happen to a market when everything goes wrong. I mean, this is going to be the biggest sell-off in crude oil history, biggest one-day move. I think right now we're down over 44% in one day. And it's really a combination of time right now. The delivery is coming due. Nobody wants the oil. There's too much oil out there, so they can't give it away right now. And that's why these prices are collapsing.
What was the significance today, though, Phil? I mean, we knew about this broad macro, dismal realities, but what happened today?
I think it was optimism that the OPEC production cuts, or we would start to see some demand save this market from this washout. And to be honest with you, if you go back and you look even a couple of months out, there's a lot of optimism that the oil prices are going to get better. We're going to see production fall at a record pace. We're going to see people shut in wells here in the United States. So we know production is going to get worse. The big question is, when is demand going to come back? And as you can see in the stock market, we're seeing a little bit of optimism that maybe demand will come back. Some of these companies are going to get back to work slowly but surely, but it doesn't matter. If you have to deliver oil tomorrow, you're in trouble because all of those good things aren't going to happen fast enough to save the day at the last minute.
It's an outside issue, but it's intriguing to me to notice that gold is up today, and it's had a very good year. I think it's up close to 20% on the year in the face of this rapid decline in oil prices. Normally, not all the time, but you remind me that they're kind of in tandem. Well, they're not now. What do you make of that?
No, they're not. And I'll tell you, gold is in a situation where it's more and more going to become like a currency. What we're going to see because of the historic quantitative easing around the globe, everybody's printing money to save their economy. Gold is going to be that safe haven. And gold, you always have this balance, Neil, as we've talked about before, a balance of gold being a safe haven against a foreign currency, but also a commodity that can be impacted by a slowdown in demand. If the economy really pulls back, you don't get as much physical buying for gold. So it's really a market that you really have to judge the mood on a day-to-day basis. But I'll tell you this, I mean, from a long-term perspective, gold looks very bullish at this point. And you have to go back to the last time we did as much quantitative easing, during the financial crisis. Gold prices initially collapsed, went down to like $666 an ounce, only to turn around and go back to all-time highs in a couple of years. Because ultimately, when you print a lot of money, which the world is doing right now, it's going to be very supportive for gold. So on a day-to-day basis, you're going to see some strong fluctuations. But longer term, we're probably going to see all-time highs in gold before this is all said and done.
All right, we'll watch it very closely, my friend. Phil Flynn follows this better than anyone I know.